different area. We should see whether the price paid or payable for the such supply is the sole consideration and the recipient are not related person. If both these conditions are satisfied, then the value of supply shall be transaction value as determined under section 15.1. In other cases, the value of supply will be determined as per section 15.4 read with the relevant rules. That is, just to give a quick recap of the same. The first step will be to determine whether the particular supply of goods or service is covered under section 15.5 read with relevant rules. If that is the case, in that case, for the particular supply of goods or service, the exact valuation mechanism have been already prescribed and we need not look at the general rules of valuation. If a particular supply of service or goods does not fall under section 15.5, then we have to look into the general rules. So in order to see which mechanism will be applicable, the twin factors are to be tested. That is whether price paid or payable is the sole consideration and whether the recipient and supplier are not related person. If both these conditions are satisfied, then the value of supply will be transaction value. That is the actual value that is charged for the particular supply of goods or services as per the contract which is paid or payable, etc. That amount shall be treated as the value of supply. In case if either one of the conditions, that is if the price is not sole consideration, which includes some element of barter transactions or entirely barter transactions, or in case the transaction is between related person, in that case the valuation mechanism should be determined as provided in section 15.4 read with the relevant rules. So with this background, we will dive into the mechanism of determining the value of supply first as per section 15.1, and then we will look at the cases for cases where it is not getting covered under 15.1, how the 15.4 is applicable and what rules should be looked at, and at the end we will have an overview on section 15.5, what are all the examples of transactions that get covered, etc. And a few specific areas of importance will be taken up under 15.5. Yeah. So the provisions of section 15.1 read with section 15.2 has been tabulated in a summarized way, in a computation way for better understanding purpose, and the explanation on 15.1, 15.2 and 15.3 will be based on this tabulation. So as I had said, under once and particular supply of goods or service is not covered under section 15.5, that is, it is not specifically notified, then it should be seen whether the price paid or payable is the sole consideration and whether the supplier and recipient are not related persons. So if both these conditions are satisfied, then the actual price that is charged in the transaction will be the value of supply, plus there will be few additions and deletions as the case may be. So we will look into each addition that is to be made and the respective deletion relating to discounts, and we will have a detailed discussion on this area. So if the important point to be noted is that whatever the addition or deletion that we are going to see, it is going to be added or subtracted only if the same is not included in the transaction value as determined under the 15.1. If it is already included there or reduced from there, we need not add or reduce subsequently also. So with this background, we will move into the specific items of what and all is required to be added to the transaction value as determined under 15.1. So first, the items that are to be added are prescribed under section 15.2 and under different clauses, 15.2a to 15.2e. So we will 15.2e. So we will look into each of the aspects. First, any taxes, duties, cesses, or any amount that is levied as a tax other than GST component, including GST cess. If it is separately charged by the supplier, in that case, that amount should be added to the value of supply. For example, if, the landowner is letting out the property on rent, in addition to the rent, he is also charging the municipal taxes that has been paid by him to the tenant. In that case, any duties, taxes that is charged other than the GST law, in addition to the actual supply of rental, the value on which GST should be paid by the supplier or collected by the supplier will include the actual municipal taxes also that he has charged separately from the supplier. So the key term that is to be noted is that the tax should be taxed under any other law other than GST law, and it should be separately charged by the supplier. If only these two conditions are satisfied, then the tax component should be added to the value of supply to determine the GST. So, in this case, there is a scenario under income tax where the TCS transactions are applicable. So, can anyone just say under which circumstance TCS under income tax will be applicable? Can anyone just drop in the text box? When TCS under, how TCS under income tax applies or how it works? Anyone can drop in the chat box, or if it is permitting you, you can also unmute and speak. But I don't think that access has been given. Okay. So, is there anyone who can tell how TCS under income tax operates, or else I will continue explaining this. Okay, fine. I don't see any message in the chat box. Okay, so then I will give an overview of how TCS generally works. TCS, as the abbreviation is commonly used, stands for tax collected at source. It is similar to, but exact opposite of TDS provisions. TDS, many of us might be familiar, where out of the amount that is to be paid to a person, a certain portion of the amount will be deducted and it will be paid, and the deducted portion will be remitted to the government. TCS is a case where the seller or the supplier collects income tax in addition to the value of the actual goods or services at prescribed rate. So the query is whether the TCS collected under income tax shall be considered as taxes and duties that is collected under any other law or levy under any other law, and it is charged separately, because definitely TCS is charged separately in the invoice. But whether the first condition is getting satisfied, that is whether TCS qualifies as tax levied under any other law other than GST law. So this question was put up before the CBAC, and CBAC, to avoid the confusions, etc., they came up with the circular 76/50/2018, which clearly demarcated the difference between levy of tax and collection of tax. TCS is not levy of tax because it is just a mechanism of collection of tax. Levy of tax will be done only at the time of the assessment, where the tax is computed and the tax already collected in form of TCS or advance tax, etc., is already adjusted. Since TCS is not levy of tax, the TCS component that is collected by the supplier does not meet the twin conditions that is laid down under 15(2)(a). That is, it should be tax, duties, cesses that is other than levied under any other act other than GST law. Since TCS is not a levy of tax, or merely it is an interim levy or mere collection of tax, it shall not qualify for addition under 15(2)(a). So, in nutshell, whatever is the TCS that you are collecting from the customer, you need not pay GST on it, because it does not include, it shall not be included in the value of supply. So, that is relating to the first addition under 15(2)(a). Moving on to the second addition under section 15(2)(b). So, this is very relevant and also very important, because in most of the cases, there will be some amount that supplier is liable to pay, but the recipient would have incurred. For example, the contract will say transporter, that is the transport is liability of the supplier. But due to proximity and due to cost effectiveness, the recipient might have paid the amount directly to the transporter, or the recipient would have undertaken the actual transport activity to his own place. So in that case, what the provisions of section 15(2)(b) is telling is that whenever the supplier is liable to pay in relation to such supply any amount, but it has been incurred by the recipient, that is indirect consideration that is paid to the supplier, because supplier should have incurred that amount elsewhere, but the recipient has indirectly paid that amount to the third party who should have recovered the money from the supplier. So what the intention of this addition is that the consideration is being indirectly paid to the supplier by repaying his payable or meeting his liability. So in that case, whatever is the value that is charged, that is paid by the recipient on behalf of the supplier, is to be included in the value of supply of such activity. So the key terms to be noted here is that any amount on which supplier is liable to pay. Liable to pay means there should be some contractual or agreement liability, and it should not be any verbal or implied liability. It should be clearly laid out that supplier is liable for this transaction, and such transaction or such amount should be in relation to the supply, actual supply of the goods or service that we are looking at, and that amount should have been incurred by the recipient. So only if all these three conditions are satisfied, such amount is to be added to the value of the actual supply by computing GST in the hands of the supplier on deciding what amount he should charge. So on this regard, this without looking into the note that is mentioned here, I just want to put a common question. In case where the for example, let's take automobile sector, where the recipient would have asked for a particular design of a part or component from a manufacturer. The manufacturing activity will be subject to the specific requirement of the recipient. So he will have the specific molds on what shape that part is to be and what should be the functionality, etc. So what the recipient is doing is that he is giving the capital goods or the molds or the dies that are used for the manufacturing of the actual activity. So in this case, whether the value of the molds and dies or such similar capital goods that is given by the actual recipient based on his specifications to the supplier for manufacture of those goods, whether that amount will be included in the value of supply under section 15(2)(b). Is there anyone in the chat box who wants to answer that? And why it should be included and why it should not be included? Okay. Yeah, that is relating to scrap. Yes. The answer that was part by Mr. Vasan. Yes. So, just the next question that I raised, is there any answer on this regard? Or any observation or anything? Or I can also repeat the question. What I asked was, in case if there is a specific requirement of the recipient and they have the blueprint of how to on what specification the product is to be, and they have the exact molds and mechanisms for that, they have the asset for that, but they want the supplier to do the activity and give the finished product to them. So since they have a specific specifications for the end product, they are giving the relevant capital asset also, or the molds and dies also to manufacture such product and give it to the recipient. So since supplier being the actual manufacturer, the liability or the actual need for capital asset is of the supplier only. But in this case, the recipient is giving that asset to the supplier so that he manufactures and gives the end product. So in this case, on what we have seen under section 15(2)(b), just whether anyone can you kindly tell whether that amount will be included or not included? What will be the implication if it is included, and why it should be included or not included? Yeah. Don't see any. Yeah, value to be included. Okay. Value to be included is one answer that I have got. Is there any other answers? I'll just proceed. So, just without going further into the exact circular, etc., just this exact point of 15(2)(b), what it says is that first supplier is to be liable to pay, and then such liability should be in relation to the actual supplier, and then the recipient should have incurred the actual amount. So, before deciding whether any transaction will get added or included under section 15(2)(b), it is important to determine whether all these three criteria are satisfied. So, the question for which the question that I had asked earlier, the answer depends upon the who is liable to pay such amount. That is how the contract is structured. Because each contract might have its own variations. Each contract might cast the liability on either supplier, recipient, or on a third party as well. So it is very important that the contract clearly mentions for which activity the supplier or recipient is liable. So in the exact query that I had asked, or the question that I had raised, if the supplier is liable for providing such molds and dies or similar capital assets, but it has been incurred by the recipient. In such case, the actual some value is to be added under 15(2)(b), but it is not the full value, but it is the amortized value of the capital asset. That is what has been clarified by circular number 47/21/2018. Because when a recipient is giving a capital asset or a mold or a die to a supplier for manufacture purpose, they don't normally give it perpetually. They give it only during the period of manufacture. So, if the entire value of the capital asset is included in the value of supply, it will not be right, and it will result in exorbitant tax liability. So, in order to avoid this situation, the government came up with a circular which said that in case if the supplier is liable to undertake such transactions in relating to supply of molds, dies, and similar capital equipments for the manufacture purpose, but it has been provided by the recipient. In that case, the supplier is to add the value of supply of the amortized cost during the period of production or the period for which he hold the asset. That amortized value. Amortized value is nothing but your similar to your depreciation and return down value. That is to be computed and that is to be added in the 15(2)(b). Now again, when we see the term amortized cost, the manner of amortization has not been prescribed specifically. So, in case where the manner of amortization has not been prescribed specifically, there are various ways of computing the amortization. Let it be the straight line method, or let it be using the income tax rates, or let it be using the Companies Act rate, or whichever is more logical for the particular activity and which can be substantiated, that method can be used. But in the same case, if the liability of the providing such molds, dies, and capital asset lies with the recipient, and they are giving it to the supplier for the purpose of the respective supplier. In such case, since the liability is not on the supplier or the supplier does not have contractual liability to incur expense on such capital items, the value of supply or the value of supply that is charged by the supplier should not include the value of the molds and dies or the relevant capital asset that is being provided by the recipient. So, in the first case, where the supplier was liable to incur such expense and the amortized cost was included in the value of the actual supply, the recipient, since he's giving the machinery or the molds and dies on free or cost basis, he has to reverse the relevant ITC under section 17(5)(h), which says that any item that is given on gift is to be ITC is to be reversed. In case where the second scenario where the recipient does not or the recipient has the liability to contractually provide the asset, then it will not amount to supply and the recipient may not reverse ITC. That is one point that has been clarified in this regard by Circular 47/21/2018. The circular specifically addressed the components of molds and dies, but applying this principle, the similar capital assets that are used for manufacturing that is being transferred by the recipient to supplier, etc., can also be subject to the valuation aspects laid down by the using the principles that is laid down by the relevant circular. So we will move on to the next item of addition. As of now, we have seen the applicability of section 15(2)(a) and then 15(2)(b). Now we are going to the applicability of 15(2)(c), what amount is to be added. 15(2)(c) is bifurcated into two components. First component, any incidental expenses including commission and packaging, if it is charged by the supplier to the recipient. So, here also two conditions have to be met. First, such expense should be incidental to the relevant supply. Incidental means that is in addition, that is required for the actual supply or that is aiding the actual supply. So, yeah. So, the first condition is that the expense should be incidental expense, and the second condition is that should be charged to the recipient of the supply. That is, it should be charged separately in the invoice to the recipient of the supply. So, what other expenses can be considered as incidental expenses? Example, if there is any commission that is paid to the agent and the commission is recovered from the recipient, or any packing charges, inspection charges, certification charges, testing charges, etc., or similar charges that is incurred in relation to such supply, that is incidental to such supply, and that is separately recovered from the recipient, should not be treated as a separate supply, but the value of such incidental expense that is recovered as a reimbursement, etc., should be not as a reimbursement, that I will come later, but just for the purpose of discussion, I am using the term reimbursement. So, the incidental expense that is recovered should be added to the value of supply. That is one leg of section 15(2)(c). The other component of section 15(2)(c), which is important to note, is that any amount that is charged for anything done by the supplier, that is, any amount that is charged for anything done by the supplier in respect of the supply of goods or service or both at the time or before delivery of goods or services, supply of goods or services. So, what does this provision say is that any amount that is charged by the supplier, let it be incidental or not, any amount that is charged by the supplier that is incurred by the supplier in respect of the relevant supply on or before the delivery or time of supply. So, what significance it poses is that it specifically lays down the line that only the expenses that is incurred and recovered on or before the time of supply or the delivery of the goods, etc., is to be included in the value of supply under section 15(2)(c). Any post-sale activities, for example, repair activities, etc., are not to be included here. That is the significant. So, under 15(2)(c), the second leg of 15(2)(c), the important point is to note down the timeline that is laid by the 15(2)(c). Because any amount that is charged for anything done by the supplier at or before the time of delivery of goods or time of supply is only to be included. So that is important to note. Next, any interest or late fee or penalty for delayed payment of any consideration that is to be added to the value of supply. Example, if there is an invoice that is raised for 1,000 rupees, that is to be paid within a credit period of 30 days. If it is not paid within a credit period of 30 days, then in that case, whatever is the excess day, some portion of interest will be generally charged in the business for the funding purpose. So, if that is the case, whatever is the additional interest that is charged for delayed payment of consideration only is to be added. That is the additional interest or late fee or penalty. For delayed payment of consideration only is to be added. What another important point that is to be noted is that only the interest, late fee or penalty in relation to delayed payment of consideration is covered here, not other interest, penalty or late fee, etc. For example, there might be a penalty clause in the contract of service that if the service quality is not up to the mark, there will be some penalty that will be levied. If the service is not provided in time, some penalty will be levied. So it is important to note that all those penalties are not covered. Only the interest, late fee or penalty for delay in payment of consideration is covered. Is what is to be importantly noted. Because in general, any penalty that is levied in relation to the supply is being added as the added to the value of the relevant goods or supply and goods or services, and it is taxed at the rate in which the goods or services is getting taxed. But in case if it is a penalty that is other than for delayed consideration, then in that case, the relevant penalty should be charged as a separate service or a separate supply, and it should be taxed with the relevant rate, generally 18%. And it should not apply have the rate of the relevant goods. So that is important to have in mind. Next what addition is to be done? Any subsidy that is directly linked to the price, other than subsidy from government, including central government or state government, because seeing the definition of the term consideration, it is very clear that any subsidy that is received from the government will not form part of the consideration, and also it is not included in the value of supply. So, what is to be noted is that any subsidy that is directly linked to the price, that is, it should have direct nexus with the supply that is being undertaken. So, if that is the case, and if it is not a subsidy that is received from the government, in that case, the value of supply it will include such subsidy that is being received from the third party. So, what is important to note is that the value of it should be included in value of supply of the supplier who actually receives the subsidy. If the supplier is not the person who is actually receiving the subsidy, then even though he is undertaking the service, he is not that value is not to be added in his value of supply. So, just to give a quick overview of what we have seen, spending significant time in this area because this is the core or the crux where 90% of the transaction, the value of supply is being determined using this mechanism only. Only hardly for the next other 10% or 5 to 10% of the transaction, the value will be determined under section 15.4 or 15.5. 90% of the cases it is straightforward under 15.1 right with 15.2 and 15.3. So, what we saw, 15.1 will be applicable where price is the sole consideration and the parties are not related person. So, in that case, whatever is the actual transaction value that is being mentioned for the supply of goods or service, that is to be considered as taxable value, and some additions are to be made to the transaction value that is determined under section 15.1 if they are not already included. So, what are all to be added? First, under 15.2a, the taxes that is levied under other if it is charged separately, it is to be added. We saw that by Circular 76 2018, TCS was not considered as levy of tax and it should not be added to the value of supply for GST determination. Second, under 15.2b, the amount that the supplier is contractually liable to pay in relation to such supply, but which has been incurred by the recipient. In that case, the such value that is incurred by the recipient should be added to the value of supply. And we saw the clarification that was presented by circular 46 by 2018 in relation to supply of molds, stays, and similar capital goods in relation to supply. Based on who is liable for the activity. Then we came to 15.2c, where 15.2c was split into two components. The first component deals about the incidental expenses that is incurred by the supplier, that is separately charged to the recipient. Incidental expense includes the activities that go hand in hand with the actual supply, which includes the packing charges, installation, testing charges, etc. And then the second portion of 15.2c was dealing with any amount that is charged for anything done in respect of the supply. That is the pre-sale activities or pre-supply activities. The 15.2c, the second part of 15.2c, importantly does not include any post-sale activity, which is to be considered as a separate service and it should not be added to the value of the actual supply. And then we saw any interest, late fee or penalty that is charged for delayed payment of consideration. The key word is only delayed payment of consideration. Only in this case the value is to be added. In the other penalties that is being charged should not be added to the value of the supply of the principal goods or services. It should be dealt as a separate transaction. And then we saw the addition relating to subsidy that is directly linked to the price of the actual supply if the subsidy is received from other than government. So these are all the items to be added. So now what amount is to be subtracted? For addition, we saw around 4 to 5 items, but in subtraction, only one item, discount. However, the complexities or the interpretations that are being put forward by all the 4 addition items is nothing compared to the complexity that is being put forward or interpreted in relation to the deletion for discount, which we will see now. So, in which cases, the discount can be treated as reduction from the value of supply. It is important to note that colloquially, even colloquially, maybe whatever discount that we give, it will be reduced from the sale or considered as expense, etc. We will see our say our net sale is this much as per our books of accounts, etc. But it is important to note that only if any discount satisfies the conditions laid under section 15.3, then only it can be reduced from the value of supply for the purpose of determining GST. So we will see what conditions are being laid down under section 15.3. Yeah. So as visible in your screen, discounts can be split into 2 types based on their when the discount was known or when the discount was given. So colloquially, I will split these discounts into 2 components, that is pre-sale discount or pre-supply discount and post-supply discount. Pre-supply discount means any discount that is given before or at the time of supply. Post-supply discount means any supply that is given after the time of supply or after the supply has been effected. So in case of pre-supply discount or the discount that is given before or at the time of supply, if the discount is recorded separately in the invoice, then such amount can be reduced from the value of supply. So what is to be kept in mind? At the time of issuing invoice, if the discount is particularly known, such discount should be clearly captured in the invoice. Only if it is captured in the relevant invoice as a reduction, it will be allowed to be reduced from the value of supply for determining GST. However, in case of post-supply discounts, the issue is not as simple because at the time of supply, the discount is not known. It could be due to various reasons. We will see wide interpretations and surplus relating to post-supply discounts in few minutes. But just for one example, it is generally prevalent for industries to give volume discounts. That is, if we purchase, say, 10,000 kgs within a year, then for after the 10,000 kgs, for each kg we'll get a total discount of 50%, including the 10,000 kgs that was earlier purchased, etc. That is very much possible. So in that case, at the relevant time when the actual purchase is only 1,000 kg or 2,000 kg, we will not know whether 10,000 kg requirement or the volume requirement will be met. So only if that event is met, retrospectively the discount will be given. So it is impossible to determine the actual discount at the actual time of supply. So in such case, what are all the conditions to be satisfied? That is laid down under section 15(3)(b) for such post-sale discount to be reduced from the value of security. So first and foremost condition that is to be satisfied is that the discount should be established in the terms of agreement entered on or before the time of supply. So it is very important to know that whatever is the post-sale discount, the discount, actual discount may be computed and issued after the supply has been effected, etc. However, the provision for those discount, that is the mechanism for those discount, should be clearly laid down in the agreement before the actual supply that is happening. So that the terms of discount should be clearly captured. This is very important because if it is not specified in the agreement, then it will not be allowed as deduction for the purpose of determining value of supply. Because all the conditions that we are going to see for post-supply discounts, it is mutually inclusive conditions. That is, all the conditions have to be met. Even if one condition is not met, then the deduction will not be allowed. So first condition, the discount term should be established in the terms of the agreement. The second condition, such post-supply discount that is determined should be linked to the relevant invoices. Now here the question arises. In most of the cases, the department will come up and ask the taxpayer to link it to the particular invoices. That is one-to-one linking they will ask. For example, in this case itself, if the till purchase, assuming I am selling the goods to a recipient, I am telling if that person is purchasing goods of 10,000 kg from me, I will give total discount of 10% on whatever amount he has already paid. But if he has not purchased for 10,000 kg, there will be no discount. So this means 10,000 kg limit, I am giving the time frame of 1 year. So in that case, at the initial time, you might not be able to ascertain whether the discount will be provided or not because the quantity requirement is not met. But the terms are clearly established in the agreement. But in the later point of time, within the year, the 10,000 kg requirement is met and retrospective discount or post-sale discount for the supply that has already happened, assuming for 1 lakh rupee, the discount is given. So the question that is being posted here is whether any of the taxpayers or experts in this call, this posting this open question, whether any of you have already faced this issue, whether the department has asked you to link it one-to-one invoices. Such overall post-sale discount of 1 lakh, it might be attributable directly to 10 invoices, but it will be very difficult to establish for each invoice what is the discount. Because the discount terms are not invoice specific, it is based on the volume specific. So, is there any difficulty or interpretation that you have faced whether the invoice should be linked to the one-to-one invoices or it should be linked to the particular set of invoices, and one-to-one linking is not required. So I have my view to give on this, but before that I just want to know whether any other interpretations are there. Yeah, so I have this, maybe you can drop in the chat box. I have also received few other questions. Okay, so let's consider in course of occurrence of business. Okay, yeah. So if the penalty is for cash discount, they are asked one-to-one linking. Exactly. Yeah, this is what I wanted to see because I also faced this situation where practically the department person is coming and asking because cash discount is a post-sale discount, but they are asking one-to-one invoice linking. But whether it is required to provide one-to-one linking or whether the law says that it is required to provide one-to-one linking. the exact words that the section 15(3)(b) or the relevant law for this purpose is using is that such discount should be specifically linked to the relevant invoices. To the relevant invoices means they are not, in my view, they are not specifically telling it should be mapped to one-to-one invoices. There should be a group of invoice that should be considered as relevant and it should be attributable to those particular invoices in general. For example, there are 10 invoices. After the in the example that I had said earlier, before the volume or the quantity that is required to be sold is met, assuming there were 10 independent supplies that were undertaken. For those 10 supplies, once the volume of or the quantity of the sale is exceeded, retrospectively a discount or post-sale discount will be given. So this discount need not be bifurcated one-to-one for all these 10 invoices, but it can be in general told that this entire discount amounts or is attributable to this particular set of 10 invoices without giving one-to-one mapping, because the law does not explicitly require one-to-one mapping, but it is only telling that it should be linked to the relevant invoices. So linking together, for example, linking the discount that is received to the relevant 10 invoices should, in my view, suffice the requirement of the law. But however, practically, there are few cases where certain officers are demanding the one-to-one linking, taking a different view. But in the example that I said it is 10 invoices. It might be appealing that it is very easy to match and give, etc. But in reality, we will be looking at thousands and lakhs of invoices, where the one-to-one matching or the basis to find one-to-one matching will be literally very difficult practically. So, in cases where if any discount is getting rejected solely because it is not linked one-to-one for the relevant invoices, but you have a grouping of invoices to which you can attribute, in my view, it can be legally defended because the provision does not require one-to-one linking, or at least explicitly it does not require one-to-one linking. So, these are the two conditions. The third condition is that since we are issuing post-supply discount, post-supply discount means it cannot be reduced from the value of the supply at the time of raising invoices, because obviously at the time of raising invoice, I will not know what will be my discount. In such case, what I will do, I will subsequently raise a credit note, because there is a reduction in value. Credit note will be raised under section 34. So, as you might be aware, to raise credit note, one of the conditions is that the corresponding recipient should have reversed the ITC. Because when the supplier is raising credit note, he is taking a tax benefit in relation to the original invoice for which ITC was passed on to the recipient. So, similar to the credit note condition, for post-supply discount also, there is a requirement that ITC, that is attributable to the discount amount, is reversed by the recipient. But practically in GST portal, it is very difficult to ascertain whether the recipient has reversed the ITC. Now with the IMS facilities and other things, might be we are moving towards the direction of filling out that gap. But just till this date, I'm speaking, till this date, there is no hard and fast rule or hard and fast mechanism on which we can absolutely, a supplier can absolutely say that the recipient has reversed it. So in this scenario, the GST department has issued a circular of stating what evidence will be sufficient for the purpose of proving that recipient has reversed the credit. So, as per circular 212 of 2024, if the value of tax is less than 5 lakhs or less than equal to 5 lakhs, in such case, a mere declaration from the recipient that he has received the invoice in relation to the corresponding value is sufficient. If the value is more than or equal to 5 lakhs, then a certificate from chartered accountant or CMA, in addition to the declaration that is given by the recipient, is required to validate the fact that the ITC reversal has been done and the details of the reversal, etc. So, yeah. So just before moving further, I would just like to, based on the discussions that we had, just have a numerical example here. And I would give maybe at max 2 or 3 minutes for the attendees of this call to compute or tell what will be the value of supply based on the provisions that we saw. Value of supply that will be determined based on section 15(1). That is assuming that price is the sole consideration and it is it is not between related parties. What amount is to be added and what amount is to be reduced. So I will just have this screen projected. So the answers can be dropped in the chat box. Meanwhile, I will look into the queries that have been asked. Yeah. A specific query that has been asked in relation to HSL for charge of penalty. So as I said, if the penalty is levied in relation to delayed payment of consideration, it will not be treated as separate supply. It will be treated as value of the original supply and added to the original supply. HSL or SAC of the original supply will be on. In case if it is charged as a separate penalty, then the nature of penalty is to be evaluated. First, we have to see whether the penalty itself will be a supply. Because there are many circulars and many judgments and many views which have said that certain penalties, for example, penalty for or any consideration for non-doing of any activity, etc., will not amount to supply. So it is important to evaluate case on case basis whether the particular penalty, interest, etc., whether it falls into the definition of supply. If it falls into the definition of supply, definitely it will not be goods, it will be services. So we will be looking into the SAC code starting with chapter 99. So we should look at the relevant SAC code. If it is interest relating to financial transactions, etc., then you will have a relevant code for that. So it should be evaluated independently. Yeah. So can people drop their answer for this query that is being posted? The number can be dropped in the chat box. The calculation mechanism need not be just to see whether things have been understood or any queries in this can be raised before maybe before moving a bit further. I'll just maybe wait for a minute. So the question is being parked on the screen. What will be the value of supply based on what we have seen? Okay. Okay, right. I guess I will see any charts in the chat box. So I guess maybe I proceed this. So just to give an overview of what we have seen till now, this numerical illustration was posted just to see the understanding if there is any queries. No issue. I'll just quickly go through. So, as per 15(1), what will be the transaction value? What will be the value of supply is the transaction value. That is the price of goods. So, as per 15(2)(a), any duty or any tax that is charged under any other act and that is separately levied is to be added. So, this 6,000 will be added. Under 15(2)(c), any incidental charges, that is incurred by the supplier, and that is charged separately to the recipient will be added. So this 2000 will be added. In this case, BW Limited is the manufacturer. That is, BW Limited is the supplier, and CF Limited is the recipient. So that is important to understand who is supplier and who is recipient. And freight. Freight that is arranged by BW Limited. That is separate incidental expense that is incurred by the supplier. So this 1600 will also be added. So out of this, discount at 2% on price of goods. Price of goods is only 60,000. So on that 60,000, 2% is recorded, provided as a straightaway discount. So this is not post-sale discount, but it is discount that is provided before or at the time of supply. Hence, this amount is also separately recorded in the invoice, and it will be directly reduced from the value of supply. So the value of supply that is calculated will be 68,400, as it has been explained. Okay, then I'll just move on to the few circulars relating to the discount and various sales promotion schemes that have been implemented. So, circular 92 but 11 by 2019 is one of the important circular which states the GST treatment of certain type of discounts and buy one get one offers and other schemes, etc. But unfortunately, in most of the scenarios, the circular does not give a direct answer to the various possibilities of discounts, but it just reroutes us to the provisions of section 15.3. The circular again says the circular lays down the various possibilities or gives illustrations of possibilities of post-sale discounts, and it asks us to refer to the provisions of section 15.3. If the conditions of 15.3b are satisfied, then you proceed to reduce the value from the supply. If it is not satisfied, then the value of supply will not be reduced. So certain kinds of discounts that have been listed down in the circular includes buy more, save more option discounts. That is the discount I also mentioned in the example while explaining the post-sale discounts. That is nothing but the volume discounts. And there are other discounts known as secondary discounts. That is again the post-sale discount for which the illustration has been given. And the circular does not really provide any valuable inputs on this, but just mentions that these are all the possible discounts. You look at 15.3b again. So it does not provide any value addition. Or the purpose of the circular is not exactly met because it does not clarify anything, but just roots us back to the provisions of the Act. Yeah. So one specific scenario that is being addressed by the circular is relating to free samples and gifts. So, if we see the definition of supply under section 7, the one of the criteria to determine whether an activity is a supply is to determine whether it involves any consideration. So, in case of free samples and gifts that is provided, there is no consideration involved. So, if the consideration is not involved, then we have to look at Schedule 1. Under Schedule 1, several list of transactions are specified, which mention that if the activity is falling within Schedule 1, even if the consideration is not levied, it will be considered as supply. So, if the activity falls under Schedule 1, then whatever is the free sample or gift that is given will be taxable, or it will be charged as, it will be treated as supply, and if it is a taxable supply, the value will be determined as per Rule 28 and tax will be charged. But in case, and since the value, since the output tax is being charged, the relevant ITC need not be reversed under 15.17(5)(h). So that is important observation that is being clarified by the circular, which says if the outward supply of giving free samples and gifts are taxable, then there is no need to reverse ITC. But in cases where the such transaction is not covered under Schedule, in that case, the supply, it will not be treated as supply. So there will not be any output tax generation. Since there is no output tax generation, the normal provisions of 17(5)(h) applies where any item that is given as a gift or a free item, the ITC needs to be reduced. So that aspect has been clarified by Circular 92 of 2019. And there are other possible schemes of buy one get one schemes. That is very prevalent, where we see buy one T-shirt, get 3 T-shirts free, let it be relating to textile industry or any other industries, especially relating to the festival time, it is very common. So, in case of buy one get one schemes, what the circular says is that it is not one product sold and one product given as free, but it is indirectly two products that is sold at the same price. So it should be classified, but it should not be treated as one product being given as free, but it should be classified as either composite or mixed supplies. And then the relevant provision should be applied. Composite and mixed supplies are determined under Section 8 of the CGST Act. Based on whether it falls under composite or mixed supply, the rate at which the overall tax is to be charged will be different. So, just before concluding, I guess the time limit for this session as agreed was just 1 hour. Maybe just take a few more minutes also, because the topic as such is very vast. It is taking time to interpret all these things and present. So, just maybe I'll try to highlight going forward, try to highlight just the important aspects, and then maybe we can also have one more session on valuation itself to cover the later part. So that today's session I will restrict till the discount component. The other parts can be taken up later. So now the important in this context, as we earlier saw in relation to the post-supply discount. Post-supply discount, in addition to Circular 92, Circular 92, as I said, did not address specifically relating to post-supply discount, because it said these are the kinds of discounts that are possible. But again, go back and refer to Section 53. And it did not give any clarity. But there was one more circular that was issued, Circular 105 of 2019, which not only gave clarity, but also increased the complexity by including by introducing different dimensions to the post-sale discount. And considering the complexity that was posted with this circular, the circular was discussed and all subsequently withdrawn ab initio. Ab initio means as if the circular had not existed. So it was withdrawn later in 2019 itself. But however, it is important to analyze what the circular said and how it was withdrawn. And at the time of withdrawing the circular, there was another draft circular that was proposed by the GST Council meeting. But that circular is not effective till now. So what that draft circular is telling, and interpreting these scenarios, what is the takeaway in relation to post-supply discount in certain scenario will be the agenda for the next 10 minutes maximum, because you try to present the crux of the issue within that, and it will be of real significance because this particular area addresses various post-sale discounts, especially given by huge manufacturers. Because in general, huge manufacturers don't make their supply to the end consumer, but they provide it to the dealer. And dealer is the person who subsequently makes the supply. Yeah. So in that case, with this background, I'll just move into the content that was presented in this circular. The circular tried to address two areas. The other circular said, if the post-supply discount is given by the supplier to a dealer, if the dealer does not have any further obligations, that is, if the dealer does not have to undertake any further action to receive this discount, in that case, such discount will be subject to 15(3). Again, similar to Circular 192, Circular 92, it routed it back to provisions of Section 15(3). However, what is more interesting and important to note is that in case if the post-sale discount given by the supplier is for a particular activity that the dealer is to do, or a particular, there is a further obligation in hands of the dealer to undertake an activity. So in that case, the circular not only spoke about the discount, but it said that such discount that is given is not only said that such discount is not eligible for deduction, that it has very clearly said. If it is if the dealer is having further obligations or it is merely for post-sale incentive activities, etc., then such deduction or the discount deduction will not be allowed. But the circular went one step ahead and it said that such supply or the such discount that is given by the supplier to the dealer will not only be allowed as a deduction in the hands of the supplier, but it will also be considered as a consideration in the hands of the dealer, because indirectly dealer is providing some sales promotion services to the supplier. So what the circular indirectly said was the deduction benefits will not be allowed in the hands of the supplier, but in the hands of the recipient, that is the dealer, this amount will be treated as a supply. And whatever the discount that the supplier is giving to the dealer, it will be treated as business consideration for business ancillary services, and that will be taxable at 18% as a service, supply of service. And in one more scenario, it was stated that if the additional discount is given by the supplier to the dealer to provide special offers to the end consumers. For example, I will take the example of Saravana stores or similar shops for that example, who provide rates of products at a rate that is less than the market rate. How they are able to provide the products rate less than the market rate or the MRP is because they get huge discounts from their corresponding suppliers who push their products to increase the sales volume and generate margin by the volume of sale. So, in this scenario, what the circular tried to do was that whatever is the sales discount that is given by the original manufacturer or the original supplier to the dealer, in this case, example, Saravana stores, this discount is to be treated as consideration that is paid by the end consumer for the consumption of the product. That is, for example, if the end consumer is purchasing one book or one grocery item or one, for example, textile item, textile item from Saravana stores, that shirt cost is MRP is 100 rupees, but Saravana stores they are selling it at 90 rupees because they have received a 10 rupee discount from the shirt manufacturer, so they are able to sell it at a lower price. The discount was given by the manufacturer to enhance the sales volume and generate revenue by volume. So what the circular said was, even though the actual consideration that is collected from the end consumer for the shirt was only 90 rupees, the remaining 10 rupees was indirectly received from the original supplier by way of discount. So this 10 rupees should be added to the 90 rupees and GST is to be computed on 100 rupees on the sale that is being made to the end consumer. This is where these 2 points were the primary reasons why this circular was withdrawn retrospectively, because it created lots of ambiguities. Because in this very example that I said, the discount itself was given only for the purpose of promoting the sales and as a promotional activities and to increase sales value. If the GST component, if the GST is to be charged on the value that is including the discount also, at the hands of the end consumer, then ultimately the cost at the hands of the end consumer will be higher. And all the discount and all the promotional activities that is provided by the supplier will be of no use or will be of less use. So, there were various representations that were raised, especially from the fast-moving sector, FMCG sector and the automobile sector, that this circular having so much aspects having open-ended and stating that the value of discount provided by the supplier to the dealer will be charged or will be included in value of the supply that is made by the dealer to the end consumer, and the tax will be recovered from the end consumer. It caused lots of agitation in the respective sectors, mostly all the sectors, especially the sectors that give huge discounts for volume increase, etc. and the matter was taken up. See, the circular was issued. It is important to know that the circular was issued only in the month of June 2019. Later, in the month of September 2019, there was the 37th GST Council meeting that happened. Immediately considering the possible impact that this circular might create, possible litigation that this circular might create, and possible economic impact the circular might have, it was immediately taken and withdrawn and recommended to be withdrawn by the GST Council in the 37th Council meeting that was held just 2 months after the introduction of this circular. And it was immediately after the end of the committee, within few days, a new circular was issued which implemented what the council suggested by way of retrospectively removing this circular, as if the circular had never existed. But what point is to be considered is that one of the recommendation of the circular has been, council has been implemented, that is removing the circular 105 retrospectively. Yes, that was recommended. But there was another recommendation by the council also. In the council meeting also it was presented. The recommendation was put on by the law committee. That is noted in the agenda item 22 of the relevant council minutes. But the council detailed attachments. There was a draft model circular that was proposed in this regard, which is to have been issued in substitution of the existing circular 105 that was withdrawn. So, the council, the law committee recommendation was that the existing 105 circular is to be withdrawn, yes, but instead of that, to clarify on the aspect that 105 was trying to clarify, and to remove the ambiguities caused by 105, there was a proposed draft circular that was included or discussed in the 37th council meeting. But no, this circular has not been issued yet since then. That is, only the 105 circular was withdrawn, but the other side of the page was not given effect. That is, this circular was not given effect. So it is important to understand what this circular was trying to do. It was trying to address the ambiguity that was caused by the circular 105. So circular 105 caused ambiguity in two areas, that is para 3 and para 4. Para 3 spoke about, as we discussed, it spoke about the case where if the corresponding dealer has further obligations in respect to the discount, then the discount will not be allowed as a reduction in the hands of the supplier. If he does not have further obligations, then it will be allowed as a reduction in the hands of the supplier. That was one of the aspects. The second aspect where any sales promotion discount given by the supplier to the dealer will be treated as indirect consideration in respect of the supply that is made by the dealer to the end consumer, and the GST will be charged at the higher rate. These were the two ambiguous points of the circular that were intended to be addressed with this draft circular recommended by the law committee. So what this circular or the draft circular had in its content was that to address the first issue, that is where the post-sale discount shall be treated as a consideration or whether the value is to be reduced, etc. It gave two scenarios. If such discount are linked to value and it is known at the time of the supply, then in that case, irrespective of the fact that whether there is any further obligation in the hands of the dealer to achieve that volume target or etc., it will be permissible and it will be treated as a discount under section 15(3)(b) in relation to such supply, and subject to the satisfaction of other conditions of 15(3)(b), the value of reduction will be allowed. In the second scenario, where the post-sale discount is issued in form of a credit note to in respect of specific activities that is to be undertaken by the dealer on the directions that is given by the principal supplier. The important point that is to be noted is that in the earlier circular, the word on the direction of the principal supplier was not mentioned. It was mentioned that there was subsequent activities to be undertaken. But this circular proposed that if the activity was to be undertaken with the recipient, on the direction of the principal supplier, then it will be treated as a separate supply. Separate transaction as a business ancillary transaction. That is what the earlier circular was also telling. But this circular gives clarity on addressing the points on when, on what activities, that is only in the case where the direction is provided by the principal supplier, then this activity will be considered as a business ancillary service and it should be taxed separately. Again, even in this case, there are certain open-ended things that are existing here. What activity will be treated as to be undertaken by the supplier, because they have only given the illustrative list stating that advertisement campaign, free gift, etc., which are very broad and which might involve various complexities based on the nature of each business, but still better than the other. And the second issue that was raised by the second ambiguity that was raised by the circular 105 was relating to including the value of discount provided by the supplier to the dealer in the hands of the actual supply that is made to the end consumer, treating it as an indirect consideration. So this was clarified by this draft circular, or was intended to be clarified by this draft circular, stating that if the such discounts that is given by the supplier to the dealer will not be added in the value of supply in respect of the goods or the services that are supplied to the end consumer. However, if such discount or subsidy or similar item is received from any third party in relation to such supply, then it will be added in the value of supply as per section 15(2)(e) as we saw earlier. It will form part of the consideration. And also it is important to note that on the same issue, there is a judgment that was passed by the Honorable Madras High Court in case of Supreme Paradise versus the Assistant Commissioner, which clearly said that the further sale or supply of goods or services by the recipient at a discounted price cannot form part of the transaction value. The judgment intended to put it straightforward that the transaction that is happening between the supplier and the dealer is a separate transaction, and the transaction that is happening between the dealer and the end consumer is a separate transaction. So the discount that is given by the supplier to the dealer cannot be added to the value of the supply that is charged by the dealer to the end consumer, and only if it is given by a third party as a disguised discount or as a subsidy, in the value should be included. So the what the proposed draft circular was intended to clarify was what was also confirmed by the Honorable Madras High Court, which was the judgment that was passed in the year 2024, clarifying the same aspect. So, in this regard, with relating to the post-supply discount that is being offered, there may be various business practices that are happening, various discounts that are being given, various forms of discounts, volume discounts, started discounts, etc., etc. The taxability of each post-supply discount are to be evaluated case-on-case basis. And in few cases, the principle laid down by the draft circular can also be adopted wherever applicable, and it should also be the views of the erstwhile indirect tax law, like service tax law and the excise law, should also be seen. And whatever is the position that is being taken is to be interpreted, and there is no hard and fast rule for any post-supply discount, but it's to be evaluated case-on-case basis, is what I would like to stress on here. So, on this account, considering the want of time already, the specific duration for the session has expired, I would like to park this topic at this juncture, and maybe in a later session we can have a continuation on the valuation under GST law itself, where we will take up the other specific issues. Where as of now we have seen only the case where the value is determined under 15.1, that's the general rules, and what amounts are to be added under 15.2, and in which scenarios discounts are to be reduced under 15.3. Discounts itself are of two types, pre-sale discount and post-sale discount, and the complexities involving post-sale discount, everything we have seen. Maybe in the upcoming session, maybe the schedule that will be informed to you by the team, we can have a continuation of the valuation principles itself, where we will look into the specific cases where if the transaction cannot be, or the value cannot be determined under 15.1, what is to be done, how it is to be determined under 15.4, in what cases the transaction will be covered under 15.5, etc. That we can discuss in the later topics or the later sessions. Yeah. So, just I will take the queries now. What about financial credit notes issue? Yes. So, in case where the post-sale discount, as we saw, in case of post-sale discount, the only way to reduce the value of supply is by issuing credit notes. But when we are issuing credit notes, we have to look into the section 34 of CGST Act, where the section 34 of the CGST Act lays down certain conditions and time limits for raising credit notes. If the time limit for, if the conditions for raising credit notes is not met, or the time limit for raising credit note is not met, you cannot issue a credit note under GST law. But you can always issue a financial credit note without reducing the tax impact. So that can always be done. There is no impact or restriction on raising financial credit notes. However, if you are raising a tax invoice, or if you want to reduce the tax, then it cannot be done. Because under GST law, the post-discount benefits that can be done primarily through the credit notes that are issued. If that is not the way possible, then the other route of going for refund on account of excess payment of tax, etc., can be explored, which is also being held by various high courts, that in cases where the credit notes is issuance of credit note is not possible, the time limit to issue credit note is different from the time limit for applying refund under section 54, and as the case may be, it can be explored, and maybe under the head of excess payment of tax also refund can be claimed if the financial or the GST credit note cannot be issued. So just to put it in simple words, the financial credit notes can always be issued, irrespective of what is the requirement under the GST law. It does not have any impact. However, one point that is to be noted, and I am leaving that question open to the attendees also. In case financial credit notes are issued, it means the recipient will not pay the full amount. Assuming the taxable value to be 100 rupees, tax charge on it is 5 rupees, so the total invoice amount is 105. For some reason, a discount is given. The discount is not getting qualified under 53 or 53B. Hence, a reduction in GST is not possible. However, a financial credit note for 30 or 40 rupees is issued. So ultimately, the end consumer or the recipient will pay only 60 rupees. So in such case, in the hands of the recipient, whether the ITC reversal under section 16, read with rule 36, which speaks about the 180 days payment condition, will be triggered. That point was actually addressed, and in the circular that was withdrawn, I just show you the circular that is withdrawn. It was broadly addressed, where it is mentioned in this note. If such reduction results in the if such post-sale discount does not if such post-sale discount are to be reduced under section or not need to be reduced under 15.3, and a financial credit note is to be issued, it was clarified that ITC on account of 180 day ITC reversal on account of 180 days reversal as per section 16.2 read with relevant rule will not be applicable. It was classified. It was clarified in circular 105 about 2018. However, since this circular itself has been withdrawn and no specific clarification has been issued, in my knowledge, in relation to this point hereafter, in my view, this position can be taken up, because obviously, in case of financial credit notes, the entire amount would not have been paid. there is no possibility to meet the entire payment. And using the logic that has been, even though the circular has been struck down, this principle can be adopted and it can be argued definitely that in case where the financial credit notes is issued and the payment is not made fully on such reason, the ITC reversal for the 180 days conditions might not trigger, but that is an argument that is subject to litigation because the department will not agree. They will, because the rule says otherwise. The rule does not give a carve-out for financial credit notes. And the similar position for bad debts also, because there is no outright benefit that is given under GST for bad debts if the amount is not recovered or paid, etc. So, I guess that answers the query. Is there any other query? Maybe next 5 minutes or maximum 5 minutes based on the number of queries that is getting posted. We can have an query session for 5 minutes, and if there is nothing, we can conclude the session. Maybe if it is difficult to drop the query in the chat, maybe you can also I also request the admin to unmute everyone so that person can also unmute themselves and ask the queries. Either the query can be dropped in the chat box or it can be unmuted and asked. Request the admin to provide the access. Yeah. So, yeah. So, the floor is open for questions. Any question on relating to valuation, what we have seen relating to this policy that can be asked? Assume there are no queries. At least I cannot see anything in the chat box. So I'm assuming there are no queries. So I guess my contact details are visible on the screen. That can be always noted, and in case even after this session, any queries in relation to what we have discussed, or in general anything relating to GST and other aspects, etc., that can always be reached out to me. So my contact details can be taken note of. And with this note, I guess we can end this session here, and looking forward to meet you all again in next session. Possibly that will be a conclusion of what we are discussing now, so that we will have an hands-on grip on the valuation concept on GST. Yeah. So I'm just ending the session, and once again, thank you all for patiently listening and interacting during the session. Hope this was useful to give an overview on the general principles used for valuation principle, determination of valuation under GST, including the various discounts and conditions for reduction of discounts, etc. So, thank you all.